Hello guys, welcome back to another video, and in this video I'm gonna go over the ICT Breaker block and how to trade with it. I'm gonna also cover a little bit about daily buys and higher time frame narrative, how to find it, how to trade with it, and please watch this video to the end and subscribe to my YouTube channel down below. Also join my Discord with the link in the description. It is an awesome community and people are there very supportive, very helpful, sharing their trades every single day. Let's go into the video. ICT bullish breaker, which we are seeing in this picture, is a bullish range up or a single closed candle up in the most recent swing high, so prior to an old low being violated. This is exactly what we see here. We see still stops. This is the annotation. We see sell stops below here, below here, below here, and below here. Now after we see that, we have this leg right here. We're gonna talk about more of that later, but we're now looking at the sell side being taken. Now what is a bullish range up or single closed candle up prior to taking the liquidity right here? It is this one right here. So this is a bullish breaker from the low to the high, the range right here below the move down, taking sell stop right here as we saw before. This is a bullish ICT breaker block. As you can see, annotations bullish breaker. Now inside this, we expected, if we have a higher time frame narrative, we expect it to to trade higher, right? And now this is a confirmation for a bullish trade, and this is one of the most powerful algorithmic error setups that you can find in the market using high time frame narrative as well, and we're gonna cover this later in the video as well. Now we have this high of this leg, and many of you people think that this high needs to be violated. We need to come above this high, and now this is the ICT breaker. But no, with the confirmation of your high time frame narrative, you can enter below the sell stops with the ICT 2022 model, or you can enter in this leg with a fair value gap, inversion fair value gap, or order block. ICT mentioned that breaker is not actually price breaking above this high and then returning back, because we're not breakout traders. We can anticipate the breaker formation as we see here. Before we see this breakout here, we can anticipate it down here and inside this leg that is going up. We could potentially enter from this fair value gap and or this inversion fair value gap because in the premium. Now let's dive deeper into this. Okay, so as you can see, I mapped out the A and B, right? So this leg is like, we call it from A to B. This leg takes liquidity, right? And as I said, the algorithmic setup would be to buy here on lower time frames or buy from this fair value gap, because assuming we have a bullish narrative, as I said, this is one of the strongest algorithmic setups you can find in the market. We would put our stop loss somewhere around this low, or minimum if you're entering from this fair value gap below this candle that formed the fair value gap. Now the bread and butter setup ICT talks about in many of his videos is taking a Fibonacci from this high A to this point B low and projecting one standard deviation from this range to the upside if we are bullish and to the downside if we have a bearish breaker. This buying down here and covering up here would be a bread and butter setup. As I said, bread and butter setup. Now you also have to consider a element of time, but we're gonna cover that later in the video as well when we go through the example. We see once again sell stops taken. We have now everything annotated on the chart. We identify a bullish breaker. Now you can confirm it when we break above and return, but it's not needed, right? ICT talks about a bullish breaker and anticipating it before we actually break out of this high right here. Now you can buy here. Stop loss would be somewhere around here, where it would be invalid dependent on where is your entry, and the bread and butter setup would be one standard deviation of this range. Now if you have a more consolidation right around here, you're not trying to look for a breaker block as we're gonna see later, but you use a clean one above the price down. Even though we have consolidation and you might see breakers here, they are not there. So this is a quick overview of a breaker, how it looks like, and how you can use it in a trade. And now we're gonna actually see how to find a higher time frame narrative, how to use that, and then entry on the lower time frame with that formation that I showed you here. Now this may seem a little bit complicated, so watch this video again, and maybe you know something about breaker, maybe you don't. You can join my Discord and ask questions there or in the comments below. So let's go to the live example right now. We're on the SPX 500 daily chart. Now, why daily chart? Because this is how we determine and find out daily bias or our high time frame narrative. Now, you can also do this on 4-hour chart, but I personally do this on daily chart. So the first question is, where are we in the marketplace? Second question is, where did it come from? Third question is, where are we going to go? And fourth question is, how are we going to come there? If you see, where are we currently? If you take this imbalance, you draw it out in time, I'm gonna mark it as like this, and this is your imbalance or fair value gap. You also can draw a Fibonacci from this low to this high, and you have a range now. This is premium and this is discount, above the 50% and below the 50%. Okay, I'm currently using replay tool so you can see that how you would draw that in live market. We're inside the fair value gap, we're below the 50%, so in discount, so we are looking for a buys. Now we're not gonna look for bullish buys right away. You can, but we're gonna look for additional confirmation. What do you see here? We have buy side liquidity above here and buy side liquidity above this equal highs on daily chart time frame. So this is our drawn liquidity external, and this is our external drawn liquidity as well. Let's go to 1 day. So we see this bullish candle right taking this sell side buy side liquidity. I'm sorry, our daily bias is now half because why? We reacted from imbalance, we're going back. Now our daily bias would be bullish if those equal highs wouldn't be there, so we skip this trading day and move out to another trading day. Now understand this, day trading is not everyday trading, just like daily bias is not everyday bias. You have to understand this and trade only, and I repeat, only when the conditions are met. I'm gonna say it again, day trading is not everyday trading, just like daily bias are not every single daily bias. Keep that in mind. If we zoom in, we have equal highs right there taking, and we have to the buy side, so this is not a perfect conditions for longs right now. And if we look at here, we also got this order block right here. This is the bullish order block. Why is this a bullish order block? And I will cover order blocks in my upcoming video. But hey, this isn't a bullish. Yeah, this is high of the bullish order block. But we can also ICT said we use the wicks for the order blocks when we have imbalances, right? You can go check this. It's not fake. But where's the imbalance? It's right here. You see the imbalance from this high to this high or daily close. This is the imbalance right here. And so this is our order block. Now we go for the next day. Okay, this is perfect right here. We have the move up, taking the sell side, and now what I want to see is this price coming back, and it did. This is a order block, fill the imbalance. It's still an order block. We came up and we closed around the high of the previous day. Now this is showing me that buyers are bullish. And where are we going to, or where is our drawn liquidity? Right here and right here. Now how are we gonna get there? As I said, we reacted from it. We're probably gonna get to this imbalance and then react off this opening price from this range and then continue up. But this is not important. Important is what, so the bias for next day is bullish. For this day, for June 23rd, our bias, daily bias is bullish. So we're gonna go to the 15-minute time frame and go to that day, and we're gonna trade the 9:30 a.m. session opening. We have the 9:30, and we can go to the 5 minutes now. So 9:30 is right here. We got a 5-minute time frame. So this is that bullish order block from the daily, and this is that imbalance, and 50% of that range. This is the 9:30, and ICT said that around 9:30 there would be a Judas swing taking out sell side liquidity if we are bullish and buy side liquidity if we are bearish. Now our high time frame narrative, as we said, we are bullish. Our daily bias is bullish. And what did we do here? Internal sell side liquidity. And this is a Judas swing. This is pre 9:30 open Judas swing right here. Understand? Okay, so now we can go to the 1 minute or 3 minute or 2 minute where we are looking for our trades. This is the 9:30 open candle right here, and we're gonna wait with this. Now we took the sell side liquidity as I said, but where is actually now the breakers? We go through that like the take liquidity and we look. This is just consolidation. I said we don't want to look for that. We take up. Where's our B point? It's right here. So A point, and where's our B point? For now it's right here. This is our A to B leg. We see our breaker right here. This is our bullish breaker block. Now if we go to 2 minutes, we can even more refine it to this range. And if we go to 1 minute, this is really refined, and this is how you should go. Top-down analysis every single time when you're trading. Internal sell side liquidity taken. Daily bias, bullish. We expect price to come into this and anticipate a move before this low is taken. We can do that because we have all the conditions met. We want to see a displacement above. Now we take even more liquidity right here after 9:30, and then we displace up. Now already now we are looking for long positions. If we took a Fibonacci from this low to this high, this is discount, so we can take entry from this fair value gap, and we're gonna see if a market comes below. No, it doesn't. If we take the Fibonacci higher, as you can see, we came into this fair value gap, but it's not into discount, so we don't take this trade. And now we came up, we go higher and higher, and now this count zone also goes higher, right? We can now buy below this price. And what do we have? We have fair imbalance here, but most importantly, we have this up close candle. This up close candle is a bullish order block. The opening price of it is the ICT bullish order block. As I said, we're gonna go through in the upcoming videos, but this candle is inside this breaker block from this high to this low, this range, and now we are looking to buy inside this order block, which is from the opening price to the close. We also rally, so we're gonna buy here. You will have your limit order set for now if price doesn't go higher. Where would your stop loss have to be? ICT said place your stop loss just below the low of the order block, but what do we have here? We also have a bullish imbalance or fair value gap. Now you also have to take this into consideration because price can drop down and take you out if you have stop loss there. So the minimum stop loss placement for you would have to be below, just below this low, or more preferably below this, like A to B, below the B point. You can place it here, or here. There's a 2-point difference, depends on if you like the tight stop loss or not. Now our targets, as I said, would be from A to B. We are looking for the one standard deviation from this A point to B point, right? So this is going to be our target right here. If we use the stop loss, we also count the spread. So if we use the stop loss right here, it would give us around 2.9. I'm going to place my stop loss here, but let's see if this low gets taken, and let's see what would happen if we anticipated this trade. Now remember, we got tagged in, and now we're target one standard deviation, which is the bread and butter. Now you could also target this internal buy side liquidity, which would give you a little bit more R, but we're going to target just what ICT said identifies as a bread and butter setup. So let's go. Let's see what happens. We rally up, we drop down, a little bit drawdown. Now this is where your order block entry would get stopped out because we tap into this bullish fair value gap, and let's see what happens now. We tap in more time, and as you can see, we're also taking a consideration of time between 9:30 and 11 o'clock. You can also extend your trading session to 12, but I don't recommend taking any trades in the lunch session. As you can see, we drop deeper into this fair value gap, but candles are respecting it. So this is maybe where your drawdown would occur. We also see a liquidity being taken, so this is a good sign. And this is where you can go break even because you're almost at your take profit. And as you can see, we also didn't stop us out because price came just to our stop loss. If you had stop loss here, you wouldn't get stopped out, and your free R trade would still be valid. So we came up, you're break even now. You can be, or you can take partials. We're just consolidating, and we are out of this trade. Now this is where we are cover. This is easy bread and butter setup, and as ICT identifies it, one of the strongest algorithmic entries there is, with a breaker and the logic he taught us. So if you enjoyed this video, make sure to subscribe, join my Discord link in the description, and Good luck and good trading. See you in the next video. Stay safe.